Well, investors were asking where was the Santa Claus rally, and it finally showed up, at least for today. The tech sector led the way and was helped out by a rise in oil as colder weather is forecast for the coming weeks. As a result, triple-digit gains on the Dow and a 1% rise across the board. Here's a look at the numbers for you. The Dow rose 192 points to 17,720. The Nasdaq spiked about 67, and the S&P 500 was up nearly 22 and edging back into positive territory for the year. Bob Pisani breaks down today's rally.
Stocks rallied today, and why shouldn't they? Oil was up modestly, and Europe moved up and closed near the highs. Now, it was a good rally, with two stocks advancing for every one declining, although on light volume. That's no surprise. And it was a broad rally. All 10 sectors of the S&P 500 were up, and it was enough to push the S&P 500 into positive territory for the year. Now, that is not a trivial achievement. A lot of traders and firms are in the same position. They're just on either side of positive or negative, and a few percentage points rally in the final 3 days could make the difference between a positive or a negative year. Now, some of the most beaten up names in energy, exploration and production companies, for example, like Chesapeake, Consol, and Pioneer Natural Resources, had gains of 2 to 8% today. That's respectable, but some of the biggest energy names had very minimal gains. ExxonMobil, for example, moved up at the open, was nearing $80, but they sold right into the rally. Same with Chevron. Now, this suggests to me that investors are going to be very cautious about buying beaten up energy names in early 2016 just because they're beaten up. They have tried playing that game several times this year and were burned each time. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.